I'm probably going to name this video something like, I don't know, silver outside COMEX hours, $331.59 an ounce in fiat USD from January 1st, 1970 to April 13, 2023. Yeah, through yesterday's aggregated price discovery data. Not so much to pull a silly, lofty silver nominal price figure out of thin air, no, but to instead explicitly cite what the damning plus 53-year running silver price data shows to date. To remind anyone who dares to look or cares to do their own due diligence that sub $50 an ounce silver bullion remains relatively cheap on a historical basis. But we'll nerd out on some of those charts and others later on in this video. But here is a long-term full fiat currency era silver price chart by Momentum Structural Analysis published this past week, and it gives us a feel for where we are on a monthly basis. Now let's get in there closer and let's take the spiky quarterly price wake noise out of the picture, and you begin to see the platform currently being built for future silver valuation escalations to come. Still, the silver market remains a thimble in a haystack of global record debt piles and post-1980 fiat financializations galore. Here to remind us of that fact is SRS Rocco's report's latest chart using last month's March 2023 US deficit. In 1 month alone, we compare it to various notional silver markets and investments combined. Now give me 5, and bear with me as we do a whirlwind tour of what many analysts have been saying regarding both silver and gold on mainstream financial medias around the world this past week.
Why gold and not Bitcoin?
Because who's actually owning your Bitcoin? Who's controlling your wallet? Your gold you can actually have in your own pocket. You can actually take it out of a system. It's not electronically. If tomorrow morning, the grid goes down, you still own it. And it's been probably a safety aspect for, as long as history actually has been happening. And so I think there's a fair chance that actually history repeats itself to a certain degree. And it's acceptable, particularly now in this larger brick settlement structure, where it actually becomes a very important saving tool. Yeah. And all these participants have a huge chunk of it. So putting it to work to actually have a security in balancing or rebalancing your trade balances is actually the key issue on that.
And it has a monetary function in that respect, but when you're talking about gold, so how does this extrapolate out, because not everyone wants to invest for those same reasons into gold. Is silver going to catch those tailwinds? Are the other precious metals in the basket going to catch those tailwinds? Or is it specifically in your view that it's gold where you should be positioning?
From a central bank point of view, it's going to be gold because it's the only thing which is big enough to actually change the structure of a big asset allocator. A larger fund could actually clear tomorrow morning the silver pool, right? And if you look at the LME, basically, the LME has what for most metals, 2 days delivery. Who wants to deal with somebody who's got 2 days delivery function? So you're actually going to see that the market becomes much more physical, and that means actually all commodities actually look good, particularly silver, which actually is trading historically on such a beaten down level in an environment where it's been in backwardation for as long as I can see. I think it's going to be ready for a massive move as it starts finding interest.
What is your price target? What are your expectations for gold this year, and what are the factors leading you to this conclusion?
Right. So, we're pretty constructive even at these levels. It's done a lot of mileage. It's $130 up in the last few months. There's just a lot of things coming towards gold. You've got this inflation underpinning, which has been an issue for the past 8 months. We have recession fears. And then within the past 2 months, we've seen a bit of a game changer with the fact that you've got a banking crisis that the Fed has had to backstop and start expanding their balance sheet. All of that is playing into gold prices. We do see pricing hitting all-time highs in the short term. But ultimately, gold is a scorecard on how well the Fed lands this. And if the Fed cannot do a good enough job, we do see gold getting up to 2,500. 2,500.
Okay, that's a big jump from where we're at right now at 2014 right now. So right now we're also showing the likelihood of a Fed rate hike. So give us a sense. We have the potential recession on one side. We have the Fed potentially hiking rates on the other side. How does that impact the gold market?
So there, this idea that the Fed is handcuffed, it's got inflation, it's got financial instability risks, and then it's got a recession. And we don't think that it's going to be able to solve all three. And that's why gold comes into play, because of the increased uncertainty around all these three factors. That is a core driver behind pricing.
Are there any potential shocks coming up for the gold market? We're going to talk about the impact of Silicon Valley Bank and Signature Bank in just a moment.
Right.
But is there anything else coming up that could potentially change your outlook on the gold market?
Right. So, there's certainly sort of bearish risks we have to take into account, and the fact that the Fed could potentially over-tighten. And if they do, we do see a bit of a deflationary backdrop across all assets, including gold.
All right, so the Fed is obviously a big factor when it comes to the gold market and precious metals in general. I want to talk about Silicon Valley Bank and Signature Bank, their collapses. You said that was a game changer for the gold and for the silver market.
Right.
What made it a game changer? And then as we have big bank earnings coming up later this week, could that also impact the precious metals market?
Right, absolutely. So, you had the fact that in Q4 last year, the Fed broke a very contained market. It was the crypto tech market, and that sort of bled into the broader financial sector. And so we've seen a reallocation of wealth as there's simply been a crisis of confidence when there is a banking crisis. And that has gone into crypto, it's gone into gold, it's gone into money markets. And so with bank earnings coming up, I think investors are just very uncertain, and we'll look to see what it brings. But certainly if equities start to trade on the back foot, we could see a push further into gold.
All right, I want to circle back to that 2,500 price target. Again, just really quick for everybody listening, what would be the potential setup for us to reach 2,500 an ounce in the gold market?
You've got to look back to 2008, and gold there doubled, went from 800 to 1,900 in the space of 18 months. And so if we see the fact that hard or harder landing risks rise, and the Fed really having to forego inflation and start ramping up this balance sheet, we could see gold take off again.
Welcome back to Commodity Champions, and moving on to the precious metal space then. Gold prices breached $2,000 per ounce mark in March by 6 times, delivering an 8% of return. Silver also has witnessed a 10% of gain in March, while natural gas is trading at a 30-month lows. What are the factors contributing to the price rise or fall? Answering that and more, I'm still in conversation with our guests. I know, Kunal, you're most bullish when it comes to precious metals. So what are your targets now for this quarter? With the things that we've seen in the previous quarter already, are you changing your stance, and what are your ranges?
Like you rightly quoted, I'm bullish on gold, and I'm of the view that $2,100 to $2,150 can be easily achievable during this quarter.
Okay.
And today it is quite muted because of the way oil prices have shot up. It again brings inflationary concerns, and that will lead to another rate hike. That kind of logic is basically behind today's fall, and I don't buy that argument. The fact is that sooner or later, either on the economic side, we are going to see some more woos, or we see a Fed is going to, stop this hiking cycle. Perhaps cut interest rate later, but they will give a signal to stop this hiking cycle.
Yep.
So that both the things which I am mentioning are at the verge of happening. You cannot time it in the futures market. I can't time it. But my best guess is by June, we can see $2,100 to $2,150 on CME for gold. And India, that should translate somewhere between, 62,000, 62,500, that kind of levels.
Okay, most bullish.
To see before June.
Most bullish on the panel till time. All right, that's about gold. But I also do want to come to each one of you with your sense on where or which metal are you picking up for this quarter. Anuj, what's your sense on silver? What are you seeing in sense of a range for this quarter now? And are these current levels the buying levels?
But if you ask me for choosing one commodity, then I will choose a silver, because it is undervalued if compared you with the bullions and the base metal, because every commodity had touched the lifetime high, but still silver is not able to test the high of $50. So it is trading around $23 per ounce. So I'm expecting silver is a still undervalued commodity, and it will take cues from bullions and base metal from both. So I will choose silver, and I'm expecting in this year we will see it may test $30, and above $30, sky's the limit, and might be test
right.
$35 to $40 per ounce.
It's a very, very bullish panel that I have at hand here. So buy in crude, buy copper, buy gold, buy silver.
What's going on with gold?
I love gold. I started researching gold in 1997 at JP Morgan, and then I got to trade gold during 08-09. So I've had an amazing education around gold, and gold is really complicated. I think the thing to note right now is you are seeing people saying, this is a very uncertain time. The war in Ukraine, the U.S.-China tensions, the debt ceiling, recession risk. I want to have something safe in my portfolio, even if it's only a 2 or 3% allocation. You are seeing investment demand. Turkey last year, huge investment demand, not shockingly, given what's going on with their currency and their inflation rate. The thing, though, I think is getting less attention and needs more attention is what's going on with the central banks. So you have cyclical supports for gold to the degree we have falling rate expectations, we have a falling dollar, we still have some inflation risk, uncertainty. But the structural support is the central banks. Central banks last year bought the most gold in 1 year that they've bought since the World Gold Council started tracking this in 1950. China in November and December alone bought, I believe I'm getting the number right, 62 million tons? I'm going to get the number wrong, so forget I said that.
Now, to be fair to Miss Rebecca Patterson, it's not often she gets invited on Bloomberg's full fiat financialization channel to beat the bullish fundamental driver drum for gold bullion. Now, for the record, China bought a combined 62 metric tons of official gold bullion in November and December of last year, 2022 combined. That's close to 20 million troy ounces of gold bullion in those 2 months. And for my fellow physical gold data nerds out there, current data records for human history state we have mined collectively about 210,000 metric tons of gold bullion to date. That's something valued currently at about 13.5 trillion in fiat notional value. In our world, gone fiat currency crazy with something like a half quadrillion in combined notional asset values of all measurable asset classes combined. Gold still remains a likely rising value anchor for our increasingly unstable fiat financialized system. Back to Rebecca, who finishes strong.
But look on World Gold Council's site. They track this stuff well. But I think the important thing is as the U.S. is maybe pushing away some of its previous friends, like they'll put it that way, there are central banks saying, how do I diversify? And Russia showed that diversifying into the Canadian dollar bonds or Australian dollar bonds, that's not good enough because they're going to work with the U.S. Gold gives them a little more room to maneuver. And so I think you're going to continue to see central bank support for gold in addition to the investment demand, jewelry demand. So we're close to an all-time high in gold. I would expect this year it's going to hit a new all-time high.
Hello, this is James Anderson on behalf of SD Bullion. Smash the like button if you enjoy these bullion market updates and share it with those who might find the information valuable. Also, be sure to enter our free Monster Box sweepstakes.
Want to win 500 Silver Eagle coins just like this guy?
Yeah, this is Kevin.
Hi, Kevin. This is Dr. Tyler Wall, CEO of SD Bullion. I'm calling to let you know that you won the SD Bullion giveaway of a Monster Box of 2022 Silver Eagles.
Unbelievable. That is awesome.
So click the link below for your chance to win.
Good luck to all of you out there who enter our free 500-ounce American Silver Eagle coin giveaway sweepstakes. Silver and gold fiat US dollar spot price markets traded mostly up for the week with a bit of a sell-off to close today, Friday, April 14, 2023. The spot silver price in fiat Fed note terms closed safely above 25 per troy ounce, while it briefly cleared 26 an ounce intra-week. The 26 per ounce price is to me a key psychological long-term level, with only relatively brief durations during this full fiat currency era when silver sprang above that threshold. We are super close yet again. And back to this week's 5-day trading chart. The spot gold price in fiat Fed note terms ramped and threatened the now nominal price high of roughly $2,070 an ounce gold, but it backed off and sold off to close the week safely above the key 2,000 ounce price consolidation line. The spot gold silver ratio keeps falling slowly, closing at 79 in spot price gold divided by spot price silver division. And a reminder to you all out there, I had the privilege of being on Palisades Gold Radio, recorded this past Monday, April 10th, 2023. I'm going to leave a link to that 47-minute interview in the comments section and show notes below in case you missed it. In it, we run through a slew of topics, many of which I have covered on this very channel, and a quite few, though, that I've not yet expounded upon here. Pretty confident you'll find it worth your while to watch it. As promised, to start this week's SD Bullion Market Update, we're now going to go and finish with a few important full fiat currency era charts that are silver focused. On the current persistent hologram that is the globally quoted spot fiat US dollar silver price to date, the chart here starts January 1st, 1970, with this silver price of $1.92.5 per troy ounce silver, and it aggregates all throughout the COMEX futures market era, with silver price trading data over the last more than 53 years. Basically, all the spikes upward were bullish eras for silver spot prices, but in total, the COMEX silver futures price has added up to trade downwards over this entire era to now 15 cents an ounce aggregated. The COMEX silver futures market is a cesspool, slanted to the short side, winning generally. But there are times and eras where those cut short silver get their faces ripped off and many end in bankruptcy and or bailouts. My strong suggestion is we're gearing up for another one of those cycles to come. Here's how this stupefying full silver COMEX era chart looks when you leave it next to the ongoing red silver spot price line over the last plus 53 years. Yeah, but wait, it gets even crazier when we look outside COMEX silver futures trading hours. Now we add on top the blue line here, which is the silver prices trading action outside COMEX silver futures trading hours, basically the Eastern world's silver buying price action. You can see that once COVID 2020 came along with infinite QE policies running globally, the Eastern silver price action ran up a wall to the tune of now over 331 an ounce aggregated data over the last 53 plus years running. Now, with a logarithmic price chart, we'll look at this same chart and data. The logarithmic chart basically makes the movements on a percentage basis and not on a nominal basis. And doing this, we can bring it all home together. The red line is the global fiat US dollar quoted silver spot price ongoing. The black line is the persistently short-rigged COMEX silver spot price, which I noted is turning flat of late. That, in my mind, is a bullish sign. And finally on top, the blue Eastern world silver spot price aggregated data running beyond now 330 an ounce. And I maintain we are headed for the fifth era when the red spot price line has a meeting again with the blue Eastern price line. When, how, and what nominal price they collide again, impossible to say. What I can say is that in real value terms, when that comes to pass, silver in real valuation levels is going to buy a hell of a lot more in asset classes and real goods/services than it does today. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.